All right, welcome everybody. Good afternoon. Wall Street Jesus here, post-game show on Tuesday, May 15th. For those of you maybe new to the webinar, we get together every Tuesday after the market closes. We talk about what we focus on a day-to-day basis. That's sweeper activity and retail sentiment. Try to get a gauge on the two, and when we find some divergence, when retail is leaning one way in this market and the sharp players out there are positioning on the other side, that's what we refer to as the sweet spot. That's the opportunity we're looking for and looking to take advantage of. All right. So let me just start off quickly because I know there's quite a few new people on this webinar. Go to wallstreetjesus.com, any of the terminology, because I can guarantee you there are going to be several terms you probably aren't familiar with. You could Google them. Some of it's more of, I guess, Wall Street Jesus slang, so you probably won't find it. But go to the strategy section, and there's a lot of short, quick blogs you can quickly breeze through if you're interested to get a better understanding of what the hell we're looking at on a daily basis. All right. So again, wallstreetjesus.com, you go to the strategy section. While I'm here, we offer a 3-day free trial with no credit card required. All right. So no obligation whatsoever. You can get the premium access, which is access to this room, audio, video throughout the day, commentary on the action as it comes in, etc. Okay, and then after that, you can see some of the other subscription options we have here. 50% off the first month of the premium, which includes everything. And for whoever might be interested in just private Twitter updates, you can access that. Go to products at the top, the tab, click on private Twitter, and for $59.90 a month, you can get real-time updates on the flow throughout the day. Okay, and again, the private Twitter feed is included with the premium membership to the trading room. All right, it's not separate, not a separate cost if you join the premium package. All right, let's get into the markets here. I think this webinar fell on a good day. A lot of times, well, the last couple of times, if I remember correctly, this webinar just happened to fall on days where sentiment was a little bit too stretched and we needed a pullback. Okay, and I find myself having a tough time talking about any or getting excited about any of the action when some of the stronger signals I swear by out there are telling me that the right trade is to do nothing and wait for some sort of digestion or pullback. That was the case going into this week. Okay, for those of you who are members, as you know, we were talking about it all day, all morning through that Saturday webinar, that we needed some sort of pullback to wash out just some of that. This has been an ongoing case, guys. I don't remember sentiment shifting this drastically. Now, granted, I'm talking about extreme short-term sentiment and positioning, but I don't remember sentiment shifting this drastically. But maybe it's the case that, where I guess they're using the word late in the bull market. Who even knows if that's the case? And people are a little unsure. A lot of guys still have 2008 Armageddon in the back of the head, and they're trying to avoid that. But, we can see the most bearish sentiment readings possible. And then, you get a big rally like we did. What were we up? 8 days in a row, something ridiculous like that. And all of a sudden, everybody the same exact crowd, the retail crowd that was bearish, all of a sudden is positioning for new highs, positioning in FANG. That's their go-to. We know that, right? The riffraff trade, the go-to trade when sentiment gets too hot is FANG. You could count on 3 fingers throughout the course of this bull market where that wasn't the case. And coincidentally, off this rally, let me pull up a chart. I don't want a two-thing chart. I want a one. Hold on. You guys probably heard the headline. I think it was out of Bank of America or somebody, where the most crowded trade is the FANG trade again. And it's not a coincidence. That's usually the case when this market is as strong as it's been. And you see, you can go on social media, the Twitters, the Facebook, the retail crowd out there trying to preach to others, focus on the same names, understand the same names. And that may be the case, but that doesn't mean there's a buying opportunity every single day in the same names. And that's when sentiment's getting stretched, when they want to buy, an Amazon or a Netflix. They sell it a couple of days later, and then they're looking to buy it back at higher levels than where they sold it. And that's when they get sloppy. And when they get sloppy, a lot of times what happens is you get a day like today. Okay. And we were talking about just this Saturday on the members only webinar, which we open to the public, as you guys know, once a month. But we were talking on the Saturday webinar how this market was actually still pushing higher, even though we had that hot, shorter term bullish sentiment. In other words, on this day here, a lot of the shorter term sentiment stuff we look at was too hot. Okay. And basically, in simple English, that tells us sit tight. Whatever names you may be interested in buying, you should get a better entry, but more so even the market. If some of the signals are telling you that there's going to be some sort of market wash or consolidation, when you're in this type of environment especially, it's prudent to sit tight, wait, and look for that better entry per se. Okay, so that's what a lot of the stuff was telling us on this day right here. And the market, even though they were fades off the highs and weren't big moves, continued for 2 days to push higher, even though we were getting that hot sentiment. Okay. And you probably heard me mention in the past what usually happens, because that's not all that common, especially on the upside. Okay. Now, you don't get red hot sentiment, showing us that the crowd is extremely bullish and stocks stop on a dime and go south. That's not how it works. So it's not that uncommon that you'll see a market continue to grind higher. Okay. But ultimately, there will be a wash that wipes out that move above that overheated reading. Make sense? Okay. So these 2 days in particular were stretched over bullish sentiment. Here's the day that wipes out that whole move. Okay. And I'm going to use the market as an example here, because individual names, especially if you're in earnings season or news related, they can outperform or underperform. So things get tricky with individual names. But for the market itself, this is kind of how we try to utilize sentiment as a roadmap, as a member called it a compass, to get an idea of where we can find better entries and exits possibly. Okay. But more so where it's helped me drastically as a trader is it helps me avoid chasing when everything in my body wants to hit a buy button. This is kind of the slap in the face reminder to say, Jesus, chill out. All right. Chill out. You're up 8 straight days, God damn you. And you got bullish extreme sentiment. Relax yourself. Okay, so it's like that slap upside the head reminder to hang out, let things play out. All right. So, and if you remember, just to give you an example, in January, all right, just to give you an idea of how, it's not a crystal ball, and a lot of traders who are introduced to this, first of all, every professional trader I know has an idea of where sentiment is. And you ask myself or any of them, they wouldn't trade without knowing where it is. I don't see how I could even fathom doing that, okay? But a lot of newer traders, what'll happen is they'll see things like this where a market will continue higher for a couple days, even though the signals are telling us to sit tight, and then they'll brush it off and be like, that shit doesn't work. You know, that doesn't work. It's useless. Look at this. We're up 2 straight days after that. You know, so they kind of ignore it. But that's because they're not looking at it properly. They're not using it properly. In January, if you guys remember, for those of you who were around, this whole second half of this move here back in January, where this market just went nuts, okay? Literally, the second half, this whole move ran right through extreme bullish sentiment. Okay, this whole second half. So, but again, you heard what I mentioned earlier. What happens a lot of times, you get the longer it does, the harder the wash comes, the more bulls they're going to catch, and you're going to at least get a move to the downside that washes out all that, and it did so and then some. Okay, so that's an example I just wanted to give you guys of, you know, the proper way. When you hear me mention, I'll show you guys where sentiment is at the current time, rather than using it as exact buy-sell signals and crap like that. All right. So, like I said, today falls, the webinar falls on a decent day because if we didn't get this pull, you know, you guys, I know, probably don't enjoy me saying, listen, you know, right now there's some flow, but you don't really want to look at it. You know, where, you know, market's likely to pull or digest. So this pull came in perfect time for the webinar. Now I think we got to keep an eye. Now the flow becomes important again in my eyes, extremely important. Why? Because I want to see where the sharp money is going, especially if it's new names, okay? Because what we've been seeing the last couple of days, you got some of these tech names, these software names that have just gone bonkers, okay? And one of two things happen. Either they got to pull and digest, or we start to see flow move elsewhere. Okay, we're seeing that in a small way. As a matter of fact, that's the only stuff, for the most part, that I've been day trading is any new action in new names. I like to call them squeeze names, some of the laggards, okay? And they've been decent intraday trades. You know, some of them have followed through, some haven't, depending on the name and the action. But there's been some decent movement. I'll give you an example. Today, yesterday we started to see it, rotation into retail, and we saw a little follow through in it today again. Okay. Granted, we have earnings coming up in retail. That could be the reason why. But, you know, the momentum that rotation creates can, you know, create some nice opportunities on a shorter term scale, trade wise. You know, for me, I look, for the most part, I like to day trade that stuff, and I like to swing trade some of the sharper activity out there, the better looking, bigger size activity. Okay, so I try to day trade all the momentum stuff, and I hold overnight. I try to be as selective as possible. But I'll give you a couple names that today I traded, and I kind of scalped them in a sense, and they just kept going. KSS, that's a retail name, Kohl's. You know, and this is a name that sees action a lot. Wasn't big action, but you can see a name you compared to some of the other stuff didn't really squeeze at all, right? Of this market rally. So the early morning, you had some activity, a little more in the afternoon. This thing had a nice day today. I think it closed up $2, which was a lot higher than where I sold it. This is a name that you can get a decent trade out of over the short term or sweeper activity. PZZA, Papa John's. You can see a disaster of a chart. There you go. So you can see what it closed at. But you can see, again, total opposite. No big rally, not stretched. There wasn't any sweeper activity here yet. Okay, but no move anyhow. So even if there was, it would have been even a stronger signal. Caught a decent sweep, nothing special. And stock had a nice move throughout the day. Again, another name. All right, so let me get this thing off here so it doesn't. This is a 5-minute chart, but you can see the move. Strong move. What was another one today that I traded? Oh, I got lucky with this one, but I'm saying I got lucky because I made money, but meanwhile, the stock exploded after I sold it. Hershey's, some unusual sweeper activity, then caught some buyout chatter earlier this morning. You could see the explosion there. All right. The best looking bet today was in Disney. Had a decent move, all considering the market didn't go anywhere. Was red when the action came in, closed green. But nothing substantial. Disney's a slower mover too, anyway. Where the hell's the front of this chart here? There we go. Disney, it was a decent looking sweep. Let me get that for you here so you know what the hell that looks like. And then caught a smaller one after that. Here was the sweep I liked. So you had an opening bet, meaning player opened a new position, no open interest there on that line. Call it 1,000, June, 97.5. Pretty decent sized bet. Disney could catch some size from time to time, but he laid some wood 570, and it's like a $500,000 bet. All right. Again, not stretched by no means. If you like the spot on Disney, the order it definitely qualifies as something, as a trigger. You can be used as a trigger confirmation. Another way you can play it is, keep an eye on it, see if they come after it again. If you want it to materialize into that top shelf type activity, like PayPal, for example. So there's a number of ways you can look at this thing or play this thing. But that was the top bet today. I will say this, between yesterday and today, the action was pretty pitiful. And I'm not just talking about call activity. I'm talking about put activity. There wasn't much put buying out there. Outside of some ETF activity, which can be rolling out some May expiration stuff. We'll get into that a little bit too if you want. That creates a problem, kind of. But aside from ETF protection, replacing ETF protection, the flow was pretty quiet. And you could see even, pretty bearish day, the flow leaned bullish overall in my eyes. It just, there wasn't, as far as any new stuff, there wasn't anything that really got my attention, got me excited. So Disney was one of the better looking sweeps. The PZA was another decent sweep. And that's about it. None of the tech high beta stuff was catching action on the pullback. It was really, really quiet out there today. All right. So here's some of the bets, and I'll just touch on before we start getting into some of your names on what I'm looking at for the rest of the week here. Here's some of the sweeps today. Now, granted, these aren't all new positions, right? They're not opening sweeps. Otherwise, I would have talked about them already. But here's where some of the sweeper activity. Bank of America, July was the main focus again. The majority of the bank action, you guys probably remember me saying there's some decent action in the banks. They all come with time, and that's okay if that's how you're looking to play it. But there's some good looking bank activity that's been out there since this rally started, but a lot of it with a decent amount of time behind it. Bank of America today, the most aggressive activity was in these July 31 calls. All right. The spot is not anything exceptional. You're coming off a decent lift here. So the ideal setup would be for this to breathe a little or pull back. But if you like the banks here, they're catching some decent action. So Bank of America was one. Citi saw some action. Some of the smaller, even regional banks, they caught some decent action today. What else did we see? Oh, AMD, by the way. I know a lot of you guys trade that name. Decent looking flow again today. Decent looking flow again today. Now, AMD has rallied nicely, okay? But no pullback here while the rest of those names have been pulling back, late yesterday and today. And the flow has been consistent. Today there was some July action, maybe some of the May calls rolling out to July. Yesterday there was some big size all the way out in some Octobers. So AMD, decent flow. I wouldn't chase this, but any pullback there, I'd keep my eyes on it. It's been some strong action. What else? JCPenney, they got earnings, saw some action. Wells Fargo, part of that bank flow today. And some of the retail names. Oh, you know what's another name? Just in case anybody's interested there. I'm not a big fan of it because it could catch a lot of action, but looks interesting. Dish got walloped over earnings. Okay. I mean, it must have been a horrible quarter because I heard everybody talking about that quarter, but you've had September and Jan strikes catching some decent size. Now, Dish is a name that can catch a lot of size, especially on the block end. A lot of tied blocks and stuff like that. There's been some sweeper activity mixed in. So for anybody who may be interested in a bounce there, and these things have been working. As far as a quick trade, they've been working. They've been working. I traded, what this do? I traded this DLTR Dollar Tree, caught action into the lows, into red on this day right here. You know what I mean? And this, for me, this is all, like I put a check mark next to that action right here now. Now it's your job as a trader to protect your profits and do what you need to do off this action. Because this is squeeze action. This is squeeze action. That's all you're looking to play here. So, but we're seeing flow come into some decent names like this. Some decent names. So these are the sweepers. Here's some of the size blocks. That's where you'll see some of these regional banks and stuff. This is a broker, I think, BGCP. Unusual size block there. NYCB, New York Community Bank. You had October calls flying off the shelf today. I think there was another one. I said NYCB, right? There might have been another one that's not on this list. But this is actually the size call activity blocks and sweeps. The list prior was just sweeps. All right, but the action's been blocked. Here's what I'm looking forward to. Okay, here's what I'm playing in. Now, let me put a quick disclaimer out there first. Okay, and I hate doing this because it kind of gives, like, I'm looking the backdoor excuse from making a call per se, even though I'm not making a call, but you know what I'm getting at. We got May monthly expiration this week. Okay, so here's the problem. I stressed to you how flow becomes important. And the reason why that's different prior to this recent rally here, in my opinion, you heard me say this in prior webinars, sentiment was the most important thing in my opinion, even more so than flow. Okay, for the simple reason, like I told you, that if I see some flow coming into extreme bullish sentiment, I'm not playing that. You know what I mean? I am not playing that in this type of environment. All right. And you're probably saying, why? I mean, if the sharp money's playing in the bet's good, you got to understand something. We are not these guys that are playing these things. Okay. We don't have the bankroll that they do, nowhere even close. Okay, they have the ability to average down as much as they want. They have the ability to sell and go down to a lower strike to catch a higher delta anytime they want. They got the ability to roll out for some more time and take a hickey short term because they couldn't care less. Okay, so unless you want to experience all that, then you have to pay attention to where sentiment is on a day-to-day basis in the market. And when it comes to trading options, you know when time is an obstacle, obviously where you're pulling the trigger is crucial. Okay, so that's why it's important. Now, if you want to buy something you really like and there's a bullish sentiment out there and you're willing to average down and piece in over time, yeah, that's a different story. But a lot of you guys don't do that on a regular basis. Okay, that would be the exception. So we have right now, I think we're going into the rest of the week set up pretty decent here, meaning we had a nice little wash in bullish sentiment here. I think any weakness, whatever flow you see into any further weakness, I think is worth firing at. Now, here's the problem with flow. It's May expiration. This week, May positions expire. There's going to be a lot of rolling, a lot of position replacement out there. Okay, so you really, well, if you're in the steam room, you don't necessarily have to worry about this. It's more work on my end. I pull my hair out of my head because I like to just fire if I see something I like. But, you know, if there's, let's say, I don't know, CRM, okay, Salesforce. You got a nice pull, all right? And then you got somebody come in and buys, you know, sweeps $500,000 worth of July calls. You look in open interest, you know, CRM from prior buying has a huge position in May calls. So that player is likely just replacing, you know, that May position that's set to expire this week. You know, that becomes the real pain in the ass, excuse my French. And a lot of times, especially with names that have been winners, even though they're on pullbacks now, some of the stronger names, they wait to the last minute to do it. That's what they do. They roll up, you know, they replace positions, they take off some exposure. Sometimes they'll keep the same exposure. Okay, so even though it's bullish, it's not as aggressive as it would be if it was clean. All right. The one good thing is that some of the under the radar names, some of the squeeze names I'm showing you that are working, it's pretty easy to know if they're replacing right off the bat, right? If I see a size sweep in XYZ and I know there's, you know, it doesn't catch orders like this, I've never seen an order like this, so chances are they're not replacing anything of that size. You know, I know right off the bat in an under the radar name that it's clean and it's worth firing at. But some of the names you guys like to trade, you know, the big tech names, the FANG names that catch a ton of action, just be prepared for that. All right. And when I mean be prepared for that, don't expect to see the same type of momentum as you may normally see in the past off a size bet. That's what I'm trying to get at. All right. But the moral of the story is here that whatever flow we see from this point, I think is worth the attention. And also, I think is going to give us a decent indication of where the money may be headed next. Okay. The tech names, I think, that the names you guys like to trade, okay, if you want to stick with those names, I think they're fine. And the reason why I think they're fine, because you have a pull now here. Okay, you've had a pull. But you got to tone it back now. In other words, you got to be tactical here. So if you're looking at CRM action, you're looking to buy CRM, let's say, into tomorrow's weakness off activity, you got a decent profit off a snapback there, you got to lock that in. You know what I mean? Otherwise, you're willing to lose it. So I think those names, and a lot of you guys are okay with that, guys and girls, but I'm just saying You can't fall in love with these names. I don't think we're in a market yet where you can fall in love with this stuff anyway. You know, like we've had this market doesn't look any different yet than what we've been seeing. I mean, this market's been doing the same thing. When the bears get lined up on all one side, they run them over. When the bulls get giddy and start talking about new highs, they pull them. You know? And so that's been the playbook. We can trade the in-betweens too, or some of the shorter term sentiment that we look at. But that's been the playbook, and I think we got to stick with that. I just think we can pay closer attention to where the flow is going to see if there's any rotation out there. Does that make sense? Or you guys think I'm just rambling on making you dizzy? All right. So that's, like, for example, today we started, and yesterday, we're starting to see the money go elsewhere, right? We didn't see any buying into these tech names into weakness. All right. So to me, that was a sign maybe these things aren't ready yet. And if you see some action tomorrow into weakness into the tech names, you could get that snapback trade. But for anything more than that, you want to see where the flow, where the best looking flow, where they're focusing their attention. Interestingly enough, these energy names have been ridiculous. I mean, some of these things don't even pull. There's no pullback in them. This top repeat activity again today. You know, I mean, look at this thing. It's like a melt up here. You know, we're seeing action constantly in the Hess. So for me, you know, if you get it into some red, maybe it's worth that quick trade. But from here to look for a bigger move on top of this big move already, without some sort of wash or consolidation coming first, risk reward wise, I can't get there. You know, I can't get there. So, but let me put this out there before I get into some of your stuff. The rotation that I'm talking about, as you noticed, since this correction, I've been talking about it actually since January before the market corrected. We still haven't got it, guys. We still haven't got it. You know, we see signs of it like we've been seeing, and it just evaporates. And for me, if you're wondering what's that signal to me, that signals that this market is just still in this environment, still in this type of climate. Nothing has changed. All right. One more last quick point. I'll give an example. This pull here, we were talking about this on the Saturday member only webinar. We had this pull here, if you remember, the panic attack back in Feb, right? Then we had sentiment line up, we had flow explode, we had a nice rally, right? We got overextended, both price and sentiment was overextended, the flow concentrated in the same tech names and all that stuff. We got that wash that was much needed. If you guys remember, for those of you who were around, this wash, they came in buying aggressively those tech names again. So we may see that again. You understand? And that will set up another move like this type of thing. But just don't get too hung up on holding for more than that. That's what I'm saying. Let me get to some of your questions. If you have some names or questions about anything I mentioned here, shoot them out there. Anya saying biotech also had some nice pullbacks today. Let's see if it resumes. Yeah, and I think in general, anything that's pulled back, if you see flow in coming days into weakness, again, you don't want to chase strength. We talk about that constantly. I know it's probably making some of you nauseous, but this is not the climate to chase strength. Okay, more than not, you're not going to get away with it. Right? We spoke about that numerous times. Last year, you got away with it. You know, last year was an outlier. This year, from what we're seeing right now, this type of market environment, you're not going to get away with it. Okay, so you kind of want to do the opposite of what the retail crowd does, right? When everything's green, they love it, and when there's weakness, they want nothing to do with it, right? So you want to flip that, and you want to do the total opposite. You want to, when there's weakness out there on pullbacks, that's when you want to pay closer attention to the flow, okay? And when you're up 6 straight days, I don't know how many points we ran on the S&P, but it was quite a move. That's where you want to tone it down a bit, take off some risk, roll out some calls if you still want to hold them, but just limit any new stuff you're looking to buy. Okay, because the likelihood is something this is going to come, and obviously you want to try to avoid getting caught in that. Okay, and it's nice to have ammo when the market is doing this now. It's nice to have ammo ready for any decent flow that comes in here. Yeah, so biotech is in that crowd, Ani. Biotech, anything is in that crowd. I think even those of you guys who like to play ES, SPY, the Qs and that stuff, I don't blame you if you're looking to stick with that in this environment until we have more evidence that we're trending. I can't blame you, because there's nothing worse than buying a name, the market squeezes, and that name doesn't really move too much. You want to kill somebody. So that's why I like to use the market. You guys know me, I play mostly names throughout my whole career. But I like to talk and use the market as an example now in this type of climate more than anything, because that's kind of your roadmap in conjunction with sentiment. So the play, again, I'll try to put it in simple English for anybody who's new out there. Let's say tomorrow we get some further weakness. I haven't seen the end of the day sentiment stuff, but the likelihood is we're going to be pretty close to where you want to be looking to buy. Okay, so you may want to make a play on SPY or ES rather than trying to find flow in a name that you think will participate. Or maybe you want to go to a high beta name that saw flow in the past that you were looking at, and now you got a discount on. So it's a preference thing, I think, more than anything, especially in this environment. Khalib is saying, do you believe you can backtest and create a probable discretionary strategy based off the flow you post? Khalib, I get that question a lot. It's almost impossible to do. You can, I don't know, like for day trading purposes, you could probably do it, okay? But I don't trade the same, especially on a swing trade basis in every market environment. You're going to get lumped up doing that. So I know the hot thing is algo based, you know what I mean? And all that machine stuff, but I'll give you an example, okay? Like if you're in an all-out bull market like we were last year, it's a lot different than what we're trading it in currently. Back then, maybe your strategy is more geared to letting winners run, per se, okay? Where if you let winners run here, you gave back all your profits. So you can't trade the same. The way I like to look at it, and that's why I wouldn't want, or it's almost impossible to backtest anyway. What I do is I look at flow and sentiment as a guideline, as a map, and then I'm basing my decisions off of that, especially on anything I'm holding overnight. Okay, but you can backtest any sentiment indicator out there. You can backtest any one of them. Equity put to call, any of that stuff with Sentiment Trader, you can backtest. But again, I like to use that in addition to flow, because it helps me out with the timing aspect more. And with flow, it's hard to backtest because I'm looking at the overall flow, and I'm making the ultimate decision of whether that flow warrants attention or not. Uh, Tawar is saying you got to explain Bazooka Joe. Usually there's at least once I got to explain Bazooka Joe in a webinar. You're right. Let's see. Gordon, you saw flowing Devin and kept it going. It's difficult to know when to cut the cord. I got stuck a couple days ago, got in. I'm still up, but I'm invested. Don't have much more money to buy anything else. Yeah, and that's the thing, Gordon. Like, one thing in this game, you don't want to get. I see it a lot, though. I see it a lot, even when it's not because of certain money in the account or size of an account. But I see a lot of traders out there fall in love. Not, I won't say the word fall in love, but get obsessed with one name too much. And you don't want to do that. Okay, you don't want to do that. Like, in my opinion, okay, Devin, the reason you pull the trigger on that off that Devin action, that deserves a check mark now. What Devin does from this point on, in my opinion, that initial activity, it already did its job. So now you as a trader, you're navigating this trade. There's no around that. I get traders tell me, oh, I look in open interest and I gauge it off that, see if they're closing positions. Trust me, you're wasting your time. Okay? You're wasting your time. So the way I've learned to look at it is when a name catches action like Devin and you get that initial momentum, which it did, and it trades higher, right? I mean, Devin was more than a profitable trade. As a trader, it did its job now. Okay? If you fall in love with the name, if you fall in love with the stock or the sector, that's on you, good or bad. Now that's on you. Okay? But you're talking about a stock that's a winner. I'm seeing it, like, I give you an example. Okay? MGM. I see a lot of people obsessed with MGM. Why isn't it working? Why? I don't understand. Why? They had the buyback. Why isn't it going higher? Who gives a shit why? Maybe it's a loser. If it's a loser, you're going to lose your money, and it's just going to be a loser. That's it. Okay? And if you played Devin, PayPal, and whatever other gigantic winners they were out there, and if you played all of those, okay, and now you're holding MGM, your only loser, that's terrific. But don't get obsessed with MGM and trying to force it in a winner and not do anything else because you're just looking at MGM all day because you want another winner. You want 4 straight winners. There's going to be losers no matter what you do. You can be as selective as possible. You're going to have losers. So that's where, Khalid was asking the question about back testing, and I get the question about, setting up algos and all that stuff off the stuff I look at. This is where I want to be as robotic as possible. Okay. I see action in a name I like, right? All my signals are there. Okay. I got sentiment on my side. The action's there. I took it for a swing. If it's a winner, it's a winner. If it's a loser, it's a loser. There's nothing else I'm focusing on. After I made that trade, I couldn't care less now anymore. I couldn't care less. Now I'm waiting to set up all over again. I'm waiting for that whole thing to set up all over again, meaning sentiment and flow again. All right, and that's how I approach it. So when we get a setup, right, off of this pull, when we get a setup here, the majority of my P&L, the majority of my profits are going to come off the action I played early on here. And yeah, the likelihood that I get caught with a loser at the least off this move, I mean, that's totally normal, and I'm totally fine with that. Net, though, I should have been profitable without a doubt. You understand? If you're not profitable, then you got to go back to money management and figure that out on your end. But that's how I look at it. So whatever buying I'm doing over here, I'm looking to take profits, sell here. If a stock didn't work out and I didn't have the opportunity to sell and it's a loss, it's a loss. And I'm waiting for this to set up all over again. And I'll be ready to fire when it is. But that's what you're going to learn the more you're in this business, not to sound like an old man and all my experience, blah, blah, blah. But you're going to learn the longer you play in this game, to get hung up on the names and the stories and try to figure out, oh, but I did research and the buyback is in effect and blah, blah, blah. It's a waste of time. It's either going to be a winner or a loser. That's all it is. What else we got? Tim is saying, Sir Jesus, how does this year compare to previous years of your trading experience? Honestly, that's a great question, Tim. I'm almost not embarrassed to say, but if you knew, if you've been in this game long enough and you know my particular style, okay, this type of market, for some reason, I have more clarity, as ridiculous as that sounds, okay? In a market like last year, you really, you could throw a dart. As long as you're not trying to be a wise guy and shorting this run last year, you're going to make money. It's just a matter of how much money you made. You could have made more. You know what I mean? That's what it comes down to. And that's all luck, in my opinion. Maybe you could have tinkered a couple of things, made a little bit more money, but the majority of it's luck. I should have held this one a little bit longer. I should have bought this instead of this. All right. But in last year's market, I don't feel like I have much of an edge. Okay, because everything's bullish, right? The sentiment stuff I look at, it triggered once every couple of months, like Brexit. There was no extreme bearish sentiment for me last year, at least the second half of the year. So now in this market, the stuff I like to focus on, I feel like becomes more useful. I'm back looking at all those sentiment indicators I love to look at. I'm fascinated by them. I look at them every day, intraday, religiously. So it depends on who you're asked. But for me, this type of trading environment, as a tactical trader, if you do the things you need to do, I think you would find this type of environment actually more enjoyable in the sense. But again, it takes I hate to use the word discipline, but because you know what you need to do. You know what you need to do. It's just a matter of doing it. Okay? That, come on now. Every single one of us in here, okay? Whether you're looking at sentiment or not, okay? But more so if you're looking at sentiment, you can't buy this up here. Okay? You can't do that. You can't go all in up here, right? So if you did and you got caught, it's on you. It's not that the game became or the environment became any more complicated in the sense, because you shouldn't have done it. The likelihood of you getting away with it wasn't in your favor. The odds weren't in your favor. But you did it anyway. So I think, those are the things you need to focus and work on a day-to-day basis in this game. But, it's a simple game plan is what I'm getting at, Tim. And not to make it easy, because it's not to implement, but it's a simple game plan in this environment. You know what I mean? Win or lose. Not about winning and losing, because you're going to have losses even when you do the things you need to do. But you're going to have a hell of a lot more winners than losers. And it's a pretty clean-cut game plan. You know what I mean? It's a pretty simple game plan. There's a time when you should be looking to buy, and there's a time when you should not be buying. And if you do that, you're going to find some success, you know. But overall, if you're asking me overall in this market, okay, guys, this is Cupcake City as opposed to correction or whatever the hell you want to call this thing. This is, don't even say this is a rough market, rough correction. This is not even close to some of the stuff I've seen. Not even close. Told you, 1998, the Asian contagion, all right? Market was all out bull mode, went into correction. I remember some of the leaders getting chopped in half, down 50% off the highs. Looked like they were going straight to zero, felt like. And then ultimately went to new highs. You know what followed after 98. All right, so this is normal consolidation right now. I mean, look, this is coming off a ridiculous year last year, and this market just breathing it out right now. Now, will there be something bigger that lies ahead to the downside? That's very possible. I have no idea. I wouldn't say, oh, no, for sure there isn't. I have no idea. I don't think anybody has an idea. I know nobody has an idea. But you can't, you can't worry about that stuff. Like the way we trade, again, guys, if you trade, and those of you who are trading options, you trade, whether you believe it or not, you're gambling, you're trading tactically. Okay? You can't focus on that stuff because that stuff doesn't help you right now. It may lead to Armageddon. That could happen 2 years from now. What good is that going to do you now? We're trading what we have in front of us. That's all. So if you're investing or you're a trend trader or all that stuff, it's a different story. You're waiting for some sort of trend out of this, or, but the type of traders that I would say 90% of you guys are in here, we're active tactical traders. That's what we are. So we're looking to buy weakness when sentiment aligns, right? And we're looking to sell that rip as a trade, to trade it out. That's what we're looking to do. Right, Ani? Ani knows what I'm talking about. What else we got here? Let me get to some other questions. Speaking of Ani, he's saying, I sold IGT too soon and held MGM too long. Yeah, I mean, listen, it happens. What are you going to do, MGM, like, they got the question whether I was looking to average down, and I'll tell you why I'm not, okay? One, I don't even want to focus on it, okay? But two, I don't want to put more money to work here if it doesn't warrant it just because it hasn't gone higher yet. All right, this was big time earnings action that went into earnings, okay? MGM crapped the bed off earnings. It was an awful quarter, okay? They took all that May call buying and they pushed it out to August. Okay, so a bullish sign, right? They're pushing it out to August. They're adding to August positions, so they're still bullish. But, in the initial activity there was still earnings activity. So the answer to the question, will I average down? Only if I see, and it's clear to me, that new buying is coming in here post-earnings. That's what I would need to see for me to add to MGM, if you guys are looking at that, add to August calls. Aside from that, otherwise I wouldn't pay attention to it, and I'd just be focusing on the next setup in this market here. That's what I'd be focusing on. If we have another down day or two, the potential winners out of flow that come out of that, the next PayPal, that sort of stuff. So that's what I would be focused on right now. Not any of these past names that the market has already rallied and stuff like that. But yeah, IGT, that sector has been ridiculous. By the way, I didn't do a great job in my swing account of owning enough of these things off the last setup. This one was one I should have owned. You know what screwed me, guys? We were talking about this earnings season. That really screwed me off this last rally. If it wasn't earnings season, you know what I mean? I would have had a lot more of these names in my swing account, without a doubt. There's no doubt about it. But you had SGMS, you had to navigate around earnings. And then you had to look for flow post earnings. It was a pain in the neck. Same with IGT. You know, we've been talking about this IGT. You know, every time it comes down to the lower end of the range, these guys are shoveling calls. But you had to play around earnings there too. By the way, Ani, here's another one. How much call buying came into this pen consolidation down here? Please tell me how much. Somebody tell me how much, how many of those July calls did they pile up this whole sideways move? They've been selling some of them, by the way. Let me see here what they have left. They have, I think June's, they have 12,000. Let me see here. Just, I'm curious. Look at this. So yeah, I did a pretty duty job of swinging names off the last one. Here's the pen action. Here's some of the July action. So it took, what, a month and a half, 2 months through March. So it looks like June, July, they had a bunch of them. And some Mays that are going to expire. So they'll probably roll those out. But yeah, earnings screwed me up big time. I hate to make excuses, but I would have owned more of these swinging, especially I had leaps in this SGMS and I sold them like an idiot looking to buy them back. And I never did because I always wanted to be in this name. This name catches ridiculous action, you know, and they were buying leaps and everything. So I buy leaps. I still can't get myself to hold them. You believe this? Leaps I traded. I traded freaking leaps. I got a disease. What I'm saying is I bought leaps so I can hold it, and I traded them. I made a little bit of money and I sold them. You know, I ran into that predicament. It looks like the good move now, right? Let's see. PayPal. I bought October calls. I had, guys, total luck, by the way, but I had the best print you could possibly have. Okay, and that's not like me, trust me. I got totally lucky. A couple of us bought it right at the lows. There was some flow in the Octobers. I think it was the second day of action, and it turned around and turned green that day, okay? So right at the lows, and I bought Octobers so I can survive a little pull and hold it longer term. But I sold it. I'm out of PayPal. So I sold it here. I look good, right, for a day or so. Actually battled back nicely today. So get ready to hear me complain when this stock is at new highs. Minimum by October. What else we got here? Sergio saying, how many hours do you suggest you spend a day? Do you also have a minimum that we should set? Sergio, I think this is all these questions are great. By the way, I think it's a preference thing more than anything. Okay. How much time can you devote? Some people, they can't devote too much time, not only physically because they're occupied with other stuff, mentally. Me, I'm a nut, so it's hard to use me as an example. You know, this is all I do. Like basically, you know, my hobby, social life, whatever label you want to put on it, it's stocks and baseball, and it ends there. You know, all my other time is I'm spending with my family. Like I have zero interest in anything else. Anything else. You know, I have no, I don't drink. I don't. So, so for me, I'm looking at this stuff 24/7, and I have, even from day one, I have a passion for it. Like sweepers fascinate me. The flow fascinates me. Sentiment, I think it's just incredible. And I come from a gambling background, so maybe I was familiar with it, then too, and how it worked. But that's, so me, I can devote all my energy and time into it and not get burned out. Some people get burned out. I tell you, a lot of people who short, you'll burn yourself out in a week. That's another reason not to short, by the way. In a week, you won't last. So, I would say this. The only way you're really going to learn something in this game that's going to stick with you, that you can get better at, that you end up mastering, you have to be around this stuff every day. Don't get me wrong. You take vacations, you got to take breaks. I'm not talking about that. I'm saying you have to be around this stuff every day. If flow is something you really want to understand, how do you expect to understand it if you're not looking at it every day? It's just, life doesn't work that way. If you really truly want to understand how things work, you can't come in cold turkey and just wing it. You're asking for a beating. So that's, and what I stress too, like I see a question there, how do you prepare mentally? I think it's when you come into this game, you got to understand something. There is no reason to size up early on, no matter what. Okay. If you're stressing, if you're worried, if you're that concerned about a name you're in, you're just too big in that name. You're too worried about whether that one trade is going to make you money or not. And if you want to last in this game, if you want to make something bigger in this game, you want to trade professionally or something like that, think about that. That trade is hardly a pimple on your forehead. What's that trade mean? What are you going to do? You make 10 grand, 15 grand, and go blow it at the bar or on your girlfriend or boyfriend? What is it really going to do? You're going to forget you made it in a week. It means nothing. So I think that's, for me, seeing the light. I approach this game as more than just that trade for that day. Wins greater than losses. That was my ultimate goal. I just want to win more than I lose. And then when I become confident I can do that consistently, I'll find a way to size up. I was never worried about getting to that size. I'd find a way. But I needed to have the confidence that I had something, that I believe in. That's what it comes down to. So what I would stress before, for any of you who are trying to find your way, is, you size down nice and easy and try to enjoy the game. You know what I mean? Try to enjoy the game. A lot of you guys enjoy this. You have a passion for this. There's no reason to get lumped up and have losses hang over you to the point where, it's taking the fun out of the game while you're learning, because then you become disinterested. And the money should be the last thing on your mind when you're initially in this game, because you're not coming in sized up, okay, without a confident plan that you already established and you have belief in. You're not coming in sized up and going to make money consistently. You may make money now, but you're going to get lumped up and you'll be stressed out 3 months from now. That's what it is. So, you know, and I tell people who come in the room, you know, here's what 90% of traders who sign up to come into the steam room, okay, here's what they do. They come in, they look to see an alert that they can make money in. If they make money in it, they think they found God. They think they found gospel. Right? They think, oh my God, flow. I knew there was something out there just because their first trade or two was a winner. You know, instead of taking the approach, you come in, you know, and get a feel for what the hell we're trying to do here, you know? Get a feel. There's a reason why I do the webinars. I'm on the mic all day long, you know, explaining what the hell I'm looking at so you guys could get a feel and start to look at the same things. Because that's where the edge is. You know, but a lot of people don't have time or they don't want to put the time in to do that. But, you know, you'll see. Like if you're a day trader, I said you come in, look at the action, pull up a minute chart. You know, pull up a minute chart and see how these things react. You know, see how they trade off the action. Yeah, and you get a feel. They're not all going to trade the same way all the time. But that's, you know, that's how I've developed, you know, preference where I like to buy names on an intraday basis that are consolidating. Because early on, I realized that if I came late into a rally on an intraday basis, risk reward wise, it wasn't worth it. You know, that all came from feel. That's all stuff you learn by looking at this stuff every single day. But if you have too much money involved and everything you're worried about the win-loss on that trade, that one trade, it's useless. Because, guys, I've seen people make scores. I've seen people get walloped, both sides, ultimately to reverse course and be on the total other side of the ship. The guy who got walloped is now printing money, and the guy who was hitting winner after winner can't get out of his own way. So it's not about that. You got to try to stay away from that. Are you different than most in that you don't come in each day with a watch list? You know, my watch list basically is stuff that has seen action. So let's say, for example, I don't know. What's an I got an example. HBI, let's say, right? Caught some squeeze activity on yesterday. I actually traded it and took a small loss. Couldn't make money. Didn't do anything. So today I came in knowing HBI, if it catches any more action because it didn't move, you know, to be ready and be willing to fire, you know, just to have it on my head and ready. That's my watch list. But, you know, the way my style of trading, there's no reason per se for a watch list. But I know, as you know, Ani, I've been telling you for a long time, I know traders that use sentiment and flow as an indicator to what they do already, and they come in with a watch list every day, all set up. You know what I mean? So, like, if, for example, again, you probably heard the story. One guy using the DeMark exhaustion signals, you know, he's got names already that have triggered, and he's looking for flow into those names. So that's his watch list. Another guy I worked with who does well position-wise uses Elliott waves. And he's got a watch list looking for flow to come into those names. So without a doubt, I would suggest you do that if you're using the flow as a tool to something you have confidence in. Without a doubt. Like you specifically, Ani, you're a technical guy, right? You like technicals. I would make sure, you know, the names I like to trade, and I know a lot of you guys like to do that as well. Yeah, you like to trade certain names. Maybe And that's totally fine. There's nothing wrong with that. Maybe you guys like to trade the more liquid names option-wise, right? You don't want to play illiquid big spread options. All right, so you already know what names are set up. So this way, when you see flow, you don't have to do the technical stuff on the fly. All right, so you're coming in, you're saying tomorrow, okay, CRM, Baba, here's my list. I see any sweeper activity there. I'm using that as a trigger, confirmation signal. And that's where a watch list becomes really handy. Makes sense, no? Davrin saying, how do you find the flow is working now compared to when it was earnings and market move? Yeah, earnings, Davrin, earnings is always tricky. Always. The problems it creates for me is that because earnings season, there's so much hedging, I don't know what action is clean. Even if I think it's clean, I really don't know. Because I don't know what these guys are doing behind the scenes. A guy may buy a block of calls in XYZ, and I don't see it tied to stock. Maybe tomorrow he dumps his stock. Right? How do I know? So I know there's a lot of hedging around earnings season. So that's why I don't trust the action at all going into earnings. Sometimes I'll trade. I'll look to trade off the momentum, the run up, if I think it's working prior to earnings. But I always take earnings flow with a grain of salt. Always. Yeah, now you're going to have cleaner action outside of some May rolling this week, which becomes a problem. But yeah, now, I'll give an example, Davrin. PayPal. Okay? If that action came pre-earnings, honestly, I don't know if I swing it. I probably don't swing it. You understand? But because it was post-earnings, we were pretty confident. It's a clean bet. So that's the difference. That's the difference. I think any action that comes in, on a name's post-earnings, you can trust a lot more than you could pre-earnings. And it backfires too, Darren. That's the agitating part. If all the earnings flow failed, I would appreciate that more, right? Because I know, all right, the right move is to just stay away from it and don't even make a play on it. But I told you, an example, this SGMS was catching action pre-earnings. I love the name. I love the setup. I know the name well. And I didn't buy it because of earnings, and now I want to kill somebody. So, like anything else in this game, they'll frustrate you. But without a doubt, much clearer post-earnings, much clearer. No comparison. Did I miss anybody? Before we wrap it up here, did I miss anybody's question or anything? I think I got everybody, right? All right, so here I like to always, try to drill in the game plan, all right? I'll even throw it on Twitter when the end of the day sentiment stuff updates. The squeezometer closed, I think, roughly around 40. That's a thing we look at that measures short-term sentiment. If we get some weakness tomorrow, in other words, we got some red out there tomorrow, I think the flow will be a telling sign, okay? So we see them coming in, sweeping, even the hot tech names. I think we can make a play on them for a trade, maybe we see some signs of rotation again. That would be encouraging, as well. But I think, again, the flow becomes much more important now that we got closer sentiment-wise. And if we get another day of weakness, we'll probably register a snapback anyway, where you can make a play on SPY. All right, so I think we're better off, put it this way. I was a little concerned coming into the week, even though it's just one day of weakness or two, whatever it is. I think we're in a lot better shape now. We're closer to where we want to be. So that's important. All right, guys, have a great night. Thanks for stopping by. Like I said, you guys know where to find me. You have any questions? But easy way, go to strategy, wallstreetjesus.com, the strategy tab. You'll get all the answers there. All right. Be good, everybody. Good luck the rest of the week.